It's another day in paradise. Welcome. Today's segment is going to be on play the long game. Invest for compound interest using the Robinhood app. The stock market is an ecosystem of global commerce. You will never lose. So, the philosophy behind this is pretty much invest in sectors, play the compound interest game. So, what I mean by that is we all know these um, functions live. It's pretty much live. This is days, day. This is week, month, 3 months, or quarter, they call it in the finance world, and then year, or they say annually. But this is my main concern is this. I'm playing this game, the all game. And pretty much, as you can see up here, this is the game that I'm playing, the percentage. So the I call it the compound interest game. That's all I'm playing. And right now we're in a down market. Show you guys real quick. Here are my stocks. See all that red? I currently hold 93 positions, 93 assets under management. You see all that red? And I'm able to pull off a 6. Let me know when you know somebody that can do that. I would love to meet them. But I'm showing you nothing but red. I think I only had like 6 to 9. I think I can't remember the exact, but and then the rest are red, as you can see. And I pulled out a 6%. So that's the last company, 46 cents. That's pretty much all 93, and that's the game that I'm playing. Is the compound interest game. So everything else, I don't know if other investors, the way they invest, to me, I understand, you know, what they're trying to get across, but a lot of this stuff, they're mimicking investors that for their time that it worked because our time is so different. We got access to a lot of knowledge. And I think this having the knowledge is going to put you ahead of anybody else that doesn't because already knowing is half the battle. So that's how I see it. Play that game. I'm not stressed. I'm more excited about when I buy companies, um, especially global. And now I'm getting into index funds. And index funds, wow. You know, the three big ones that I'm familiar with now are iShares, SPDR, and S&P, and then Vanguard. And then they got other power shares, Invesco. What was the other one? PIMCO, Alliance from Germany. I mean, there's companies all over the world that I want a piece of. So even those index funds are key in those companies. So and those are just two off of the three. So I'm getting into index funds and then REITs. So my strategy for 2019 is I invest $1,000, and with $1,000, this is how I break it up. 600 of it will go to stocks, which is 60%. And the way I look at stocks now, there's two categories. There's the fast growth valuation with no dividends because the company reinvests the dividends back into the company, and I'll invest 30%, $300. Examples: FAANG Stocks. The second category is slow growth valuation with dividends, 30%. Um, that's the remaining 300 examples: McDonald's, 3M, Lockheed Martin. So that's how I gauge my two categories. And with those two fast growth and slow growth. I look at the globe now. I buy companies all around the world, not just in the U.S. Number two is 30% index funds, $300. So what I do with this $300, I'll look at index funds, category ETFs and iShares, SPDR, S&P, and Vanguard, and I'll spend 150 of the 300 there, and then the remaining 150, I'll invest in Precious Metals ETF, $50, Buyback ETFs, $50, and bonds ETF, $50. And as bonds, they're known to offset stocks in a declining market. So these are all just tools to help me when the market, when it goes for a dive. I want to just be able to just look at my entire portfolio and be like, oh, okay, I'm sitting at 10% while everybody else is running for the hills. So that's why I'm more focused on that, because I know when it goes up, it's gonna go up because I'm already set for it to go up. If it goes up, we all go up. But going down is what gets a lot of people, because they don't prepare for it. They just put all their resources into the offense. Just let me go up, and they don't think about the defense side, because they're both you're gonna get an attack. So you're gonna get attacked. So it's good to have some defense already set up. And then once the defense stops the attack, then boom, make your attack when you see it. So I'm just looking at this investing mindset differently from everybody else. I know everybody's got, you know, everybody got their favorites: Warren Buffett, Ray Dalio, and there's a new guy that I just started, Bogle. He just passed away. The CEO from Vanguard Group. There was another can't think of his name, but they all have like different strategies and styles and concepts. So and that's where I borrow from all them. So I'm paying homage back to these guys. Um, Probably do a video on one of them, and then the remaining 10%, which is I'll have $100 left. I'll invest it in REITs, and REITs are known for monthly dividends. As you know, stocks they get paid quarterly. So, and I'm trying to come up with another strategy within my strategy to those months 1 and 2, the months in between the quarters, to bring that up instead of having to wait till in, in, instead of having to wait those 3 months, to get the nice. Because this month is my first month that I've got the most. $13 was my total. So what I plan to do every 3 months is double it. So if I got 13, 26, and then I go from there, 26, 26. What is it? Mine's drawn the bank, 52. So I'll keep doubling it from that. 104. So that's my strategy on compound interest. Simple. Outro. Show your support by subscribing. Comment any questions or recommendations you have. Hit the like button and share this information with curious friends and family members. Until next time, let your compound interest speak for you. Alexa, smile.
Sure, I smile all the time.